Hello, welcome to Carl and Rick Talk Risk. Rick, how's it going?
Oh, awesome. I'm just in the middle of figuring out what type of a dog I would be.
I'm good.
Taking one of these internet surveys.
I'm glad you brought it up yourself because I was going to ask you about that.
Yeah, well, I'll tell you next podcast how it turns out.
All right, we are on the edge of our seats, Rick. Um, well, today I want to make one quick announcement. We're recording this August 30th, and we've also released the new Premier Intelligent Risk August issue. So I think I'll drop a link in it in our notes, and you can read it if you'd like. It's packed with practitioner-focused risk articles, insights, normally under 1,000 words, and yeah, very insightful. And we also offer a LinkedIn group where authors come and discuss, including Rick, discuss their articles, ideas, current events, all that kind of stuff. So if that's your thing, click on the link, follow it, and we'll see you in the discussion. Um,
And tune in next week when our podcast will be sponsored by Clorox, the bleach
yes.
that gets your bleaches bleached. I'm sorry,
Uh,
I'm just in a
that
snarky mood today.
that'd
It's
be
one of those
hilarious.
days.
That's a good podcast
You know,
episode.
you know, I'm rocking the ponytail. I'm into peak efficiency.
Yeah. Who would sponsor us? If anybody would sponsor us, who would sponsor us besides the what kind of dog are you quiz? I think that would be a
Probably some sleeping aid. Uh, by watching this podcast, you obviously don't have anything better to do and are having trouble sleeping. Try doze off.
yeah. Um, yeah, exactly. Hilarious.
This podcast
Oh.
has already gone to the dogs, hasn't it?
exactly. Okay. All right. Let's try. Let's try. We'll get on the rails. Um, Rick, in my youthful days, I was obsessed with something that I thought would really help me as a professional in the financial markets world, and especially as a risk manager. And I'm talking about leading indicators. Um, I had a project in one of my early jobs, and I was told, listen, go build a dashboard of leading indicators. We want to understand when the lights are blinking red, and we need to change what we're doing and protect against it and act differently as a business. And so I went and tried to do this, and I looked for one of the first things I did was look for a definition of a recession. Notoriously difficult to find, very hard to define exactly what that is. In the
But it's
US,
very easy to find a pundit who will tell you that you're going into a recession.
yes, yes, exactly. There will always be one. And what's the famous expression? They've predicted 7 of the last 3 recessions or something like that. Yeah, they're out there. Even I think it's the NBER, if I'm not mistaken, that actually says
Yeah.
the US was in a recession or not, and they take several quarters to say that, hey, we were in a recession way back then. So it's not easy to define what a recession is, and of course you need to know what that is because that's the way you correlate indicators to bad economic times. Otherwise, what's the point? And then you get into lagging indicators that tell you, hey, things were bad, but they're not timely, so who cares? What you really want, the golden indicator, is the leading indicator that's telling you something's happening, something's coming. Um, but yeah, like I say, I did a lot of work on this. I did end up building a dashboard with some unemployment trends and other things with our economics department. I'm not sure how much good it did. But it was an interesting project, and it was very humbling because as a risk manager, you learn how difficult these things are. Frankly, impossible, right? As we said in the book review we just did on Same as Ever, you can't see risks coming. I mean, have you ever looked at a forecast that for no reason suddenly dips down? You never see that. It's always a smooth gradient. So we just can't predict these things. What's your experience been, Rick, with leading indicators?
You know, first off, coming uh, uh, at this from a complexity thing, there's kind of a built-in um, feedback mechanism to mean leading to force leading indicators to not work. And if complexity science teaches us anything, is that the economy is a complex phenomena. And by complex phenomena, we mean that agents will interact and adapt.
Yeah.
And I think that in part is diminishing the power of leading indicators. Secondly, leading indicators very rarely are we given a priori um, rationale for why they work. So, for example, a lot of econometricians have told to get a leading indicator, will put a boatload of data into an econometric model, and guess what? Something significant is going to come out.
Mm.
And guess what? Because you're back testing it on data that you developed it with, guess what? It will turn out to be statistically significant.
Mm-hmm.
And after the fact, you can come up with explanations for it. But that is really bad science. And the thing is with our big data techniques now, we can find needles in the haystack even when there isn't any hay in the haystack. Or much less needles, will still find it. I see this as being a much bigger problem with as big data and AI proliferates.
Yeah.
Yes, we will find relationships, and we will come up with good relationships that do more or less hold. But the world, in my opinion, is becoming much more complex. We react to news much more readily. We react to data, I should clarify, much more readily. We have much more access to data. And that by itself basically breaks down uh, the fundamental value of a leading indicator.
Yeah.
I believe instead of looking for leading indicators from the data, we should start without any data and build leading indicators in our minds, i.e., basically rationally what should or should not make sense. We all want a leading indicator. We want a leading indicator for so many things in our lives. The economy is, in my mind, is the least of the things that we need a leading indicator for.
Yeah.
Or what most organizations need a leading indicator for.
Yeah. Yeah. That's actually what I've seen work pretty well. Is in a previous organization, they didn't put too much science into it. They made something a little more subjective. So they looked at like seasonality in certain things, and they said, well, this at this point we're in a bit of a upcycle, or we're in a bit of a down cycle, or things are going flat. And they didn't put any more detail into than that. So it kind of it helped start a conversation about where things are going. But as far as the indicators themselves, they weren't worried. And I thought that was, at the time, I was like, well, this could be improved. But, I think they had their heads screwed on straight, because they were like, there's only so much this can do for us. The rest is up to us. And that seems sensible on looking back. I wanted to give a concrete example of something you said, because I think I want to make sure I understood, and also I think it'll help the listeners. You said, people change in reacting to a leading indicator, and I think adapt. Okay, and I think an example would be the inverted yield curves we have at the moment. So traditionally, that's been a very good indicator of a recession coming. It doesn't tell you when it's coming, but it's coming. And especially the yield curve uninverting has been an almost an even better indicator. But everybody's aware of that now. The whole market knows that. Everybody's looking at the inverted yield curve. I've seen 7 headlines this week saying we're close. The twos and the tens are almost in line. We're about to uninvert. Everybody's watching this indicator, right? And so bets are being placed. Markets have sort of adapted to this leading indicator, right? So it's not going to be as effective. Like it's right. Am I understanding your point correctly?
Yeah.
Yeah.
Well, there's a whole bunch of things there tied into that. One of the interesting points that comes up to that is first off timing.
Yeah.
Okay. Uh, Guess what? I had breakfast this morning.
Yeah.
And having a coffee right now. That probably means I'll be visiting the little room down the hall sometime. Who knows when, though? Okay,
Yeah.
wow.
Yeah.
Leading indicator, Rick has his coffee. Okay.
Yeah.
So the timing between the signal and the event is a huge thing. One of the things that struck me, when I first joined industry, I was coming straight out of a PhD. And before I started and got my MBA, my PhD, I didn't really know a whole lot about the markets. And so I go through and I learn all these, techniques of investing. And I get invited to an investment conference, by one of the big houses, et cetera, et cetera. I'm there sitting in the audience, and around me were a bunch of older people, all with their graphs and charts. And I remember thinking, wow, I was blown away. Like, who could believe in this voodoo, this technical analysis voodoo?
Right.
But yet still, what does every single investment advice service market? Is they market their charting services.
Oh yeah.
Okay. Which, this is, 40 years later almost. And, I'm blown away by it. We have an incredible urge to want to know the future.
Yep.
And I think that instead of, we ought to try to tamp down that urge, as natural as it is, and said, learn to live for the moment and be alive to the future as it comes.
Mm-hmm. Mm-hmm.
Uh, that way, we'll have far less disappointment. We'll be much better prepared for surprises. Uh, and our worry and angst will go down. Being comfortable with VUCA, being comfortable with volatility, uncertainty, complexity, ambiguity.
Mm-hmm.
Um, you actually don't need the leading indicators. I understand the need for it, but when everyone uses the same data and everyone basically uses the same techniques and the same, you used the, 210s. If everyone's trading the same strategy around that, guess what? It immediately, or not immediately, but over time, it self-corrects itself and wipes itself out.
Yeah.
That's the basis of efficient markets hypothesis,
Yeah.
which, on a day-to-day basis, I think it's very hard to argue that it holds, but over the longer term, I think it's very hard to argue that it doesn't hold.
Yeah. Well said. Yeah. I mean,
So,
I'm thinking of the Japanese yen carry trade. I'm actually reading an article about it now. Just, I mean, these trades get really crowded. Everybody sees the market the same way, and yeah, VUCA, resilience, being open to whatever might happen instead of tunnel visioning on this is going to happen is yeah, wise advice.
one of my mentors, David Shaw, Professor Emeritus at Western University in London, Ontario, Canada, one of the wisest people I've ever had the pleasure to know. And he had a saying, just when you think it's a trend, you find out it's a cycle. And I think that applies to leading indicators.
Mm.
Just when you think that you've got a leading indicator, you find out it's not. Um, just when you think it's a trend, you find out it's a cycle. I think uh, that is played out so many times in my life.
Yeah.
Um, um, that's my leading indicator.
Yeah, exactly.
We in our current environment with the ready news and AI and instant gratification and instant reaction, we tend to bounce to the extremes.
Mm.
Uh, and things tend to happen sharply. And it's it's very hard to get leading indicators for things that break. So, for example, you talk about the yen carry trade. That's awesome. And it becomes a self fulfilling prophecy
Mm-hmm. Mm-hmm.
until it doesn't.
Yeah.
And then it breaks. And that's how we're bouncing between, in my opinion, between extremes in this day of AI, big data, and basically uh, machine action, whether we're talking about actual machine learning or human beings acting like algorithms. You
Mm-hmm.
know, we get those
Yeah.
imbalances, and those breakages are very hard to say.
Yeah.
Let's take the leading indicator of earthquakes in California. Okay, guess what? There's going to be an earthquake in California sometime. The big one's coming.
Yeah.
Is it coming today? Is it coming next year? Is it coming in 8 million years or 800 million years? Who knows? But there's a leading indicator saying an earthquake is coming.
Yeah, exactly. Yeah, so that I think that's our take on leading indicators. They're not entirely useless, but a lot of skepticism.
I think that thinking about leading indicators and the building of leading indicators from first principles is incredibly useful.
Yeah,
Okay, just like with most risk management, it's the planning that's the use, not the plan. It's
yeah,
the planning that is useful, not the plan itself.
mm,
Likewise, with building a leading indicator, that's where the knowledge and the intelligence, the creativity, the adaptability, the flexibility, the mindset to manage risk is built,
yeah.
not in having the leading indicator. Just like
That's
the risk
yeah,
planning versus the risk plan.
yeah. Well said. Yeah. Yeah. So that's all our experience. What's your experience with leading indicators? Do you disagree with us? Do you have one that you think is perfect? Let us know in the comments.
I
Would
do
be
have
very
one
interested
leading
to hear.
indicator that's quite accurate.
What's
That
that?
is, tomorrow I'll change my mind on everything I said today. But anyhow,
Okay, and Rick, we'll be back next week to find out what dog you are.
have fun,
Until then,
everyone.